The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday this time. And, of course, it was great seeing quite a few of you last night at the meetup at MIT on the investors. It was the Boston Investors Group. And just, we went all over the show, I must say. It was just, I'm always get quite a kick out of it because it takes me to places that I either haven't been thinking about lately or I've thought about but haven't really articulated. So that was just a lot of fun. And let's go through a couple of things. For my subscribers to my opening call this morning, I said I had a Chapman Wave trim gauge flashing. I had it the day before. It was fabulous. It worked. And I had it again last night. Oh, at the close yesterday. It was intraday. There was a reading that was exactly what would portend, regardless of where the futures are, and the futures were up at nine points at one stage early this morning. It suggests that the Dow is going to take a bit of a rug pull, go negative. And what I said is I'm expecting a pullback, and then we should slowly creep higher. And if we were up 40 points or more at mid-morning, that would be a good thing. Well, 40 points or more. The Dow's up 116 at 17,608. The S&P is up 10, lagging, but still up 10 at 2,058. The comp index is up 22 at 5,044. Gold is down 3. We'll talk about that in a moment. Gold's down 3 at 1073. Silver's down just a tad, 2 cents at 14.16. Platinum is down. High-grade copper is up at 207. Crude oil is down in the 3690s area. Gosh. And bonds are down 730 seconds at 155.08. And what's really important is that the dollar is up 51 cents at 97.85. What's really important about this, you can see, first of all, let me show you, I've got the E-minis right here. E-minis up 14.50. There's a 9-period moving average resistance at 2066. Most importantly, the 120-minute, oh, I should make that bigger. The 120-minute chart right there is in leg C. A good action. I have to wait another little bit before I can actually, I did put the up arrow in. It was a little premature, but the stochastic is over 30%, and the MACD is expanding, but it's only barely higher. And it tells me this kind of action in the MACD says you can rally, but the upside is going to be limited. You can decline, but the downside is limited. The flat MACD puts a restraining order on the upside and the downside. Hey, in this market, a restraining order is a lot of points, but it does say at this particular stage that a lot of work has to be done in the MACD to expand a little bit more for it to say, yep, now we can go, this is leg C, and we can go to a D in the 120-minute chart. Let's just get out of this. I want to talk nitty-gritties. Tonight at 6 o'clock, we'll be really talking nitty-gritties. And what do I mean? I mean that right here, TFNN. If you go to the front page of TFNN, you will see Elliott Wave 5 and the Chapman Wave. And my interpretation of Elliott Wave as it stands right now is that we're in Wave 4. That's the declining move, but we've had a tremendous bounce off the low, and we are not that far in the Dow. Look, we're at 17,602. We have to get to 18,352 to break out. I'll be talking about all the connotations. I'll be talking about this period that we're in, which has gone from mega, everything became mega. Mega is out. Giga is in. Giga even sounds bigger than mega, right? Giga. That means we're talking about skyscrapers that are taller than anything we've ever seen before. More of them than we've ever seen before. 50 or 60 going up in Manhattan over the next couple of years. The last time you had that kind of a boom was in late 1920s, and of course in 1929, August of 29, Empire State Building papers were signed, Rockefeller papers were signed, and that became the icon of the top the Labor Day weekend of 1929 at 386 on the Dow. Went down to 40. Is that going to happen again? Well, it doesn't have to happen exactly. But what I am looking at is that we are going to a period, and these things are not necessarily stoppable, that you can just put on the brakes and say, okay, that's it, no more skyscrapers. There has to be a conclusion, and the conclusion usually is the biggest in the world, the tallest in the world, the widest, whatever it is. And we are going into that stage. That's why 2016 is going to be an incredible year for social, how can I put this? For socio-economic, political, and just things. And I will talk about some of that tonight. What it is this is the start of a phase that I've been expecting for a really long time. And I believe that I'm looking at just some of the icons that have begun to at least enter into that realm where it is possible. And it's just really simple as far as I'm concerned. What we need to see, well, let me just go on this 88 wave discussion. If it's going to be 88 wave 5, they can only be if the Dow makes a new high, even if it's by 1 point. But the monthly chart has to break into the 18,352 and higher area. Once it does that, that could be the start of leg A in A or B, or A if it's in the next month or so, in the monthly chart, which says that you can, if every other month is a new wave up and then a peak, the minimum it could take you to is mid-year before you could get to leg D and peak D. And that's where you expect a sharp decline possibly to happen, but not when it's this mega giga move, because that could be an exciting move. Now, the big thing we discussed last night, and I'll be discussing with my subscribers tonight in this webinar, which you could sign up for, and it's free. It's a trial period. You get my newsletter every day. You get any updates, but you get my weekend reports, just a chunk every weekend to peruse, to go through, plus my daily calls. What's really exciting about this period is that it goes together with a number of factors, let me just get out of this, that are saying, in many ways, a lot of areas, a lot of sectors are starting to make some kind of a top here that is very important. And my big thing is, are we going to continue the rotational corrections that we've seen for 6 years? Worst one was 22%, and then the others were in the 10% or less area. Is that possible now? All of a sudden, you've got the steel stocks, SLX. Look at this steel. Look at this nice candle. I mean, that's in 2 days. Look at Alcoa. Pop on the upside. So is there now a rotation saying, wait a minute, we could get some of the really high-priced momentum stocks, like a UA, like a Under Armour and stocks like that, Nike, maybe they're the ones that are going to have some kind of a pullback here. While they pulling back, those old industrial type things will be moving. Why is GE, of all things, moving so nicely? I'm going to be discussing that tonight. But first, there'll be the preamble where I give you the fixed presentation, and then we move on live. So I really think it's exciting. It's exciting because it's the start of a phase that's going to be a follow-up phase all the time for subscribers. As I show you in my daily newsletter, I show you these icons. Let me see if I can find it here. This is the presentation tonight. Let me see if I can just scramble through here quickly. Yeah, it talks about, look at this. Socioeconomic icons become giga. That spiral to the upside. Look at all these tall buildings. And then all of a sudden you get 1, 2, 3, 4 times higher than anything you can see over here. Comes Saudi Arabia's billionaire Al-Walid bin Talat's holding company, Kingdom Holding, and he puts in extra money to complete the Jeddah Tower, over 3,300 feet in height, a kilometer. This is planned completion date 2018. This is just the first of many that we're going to see. Maybe they're not as tall, but they are spectacular. And I'm going to be talking about that in relation to, and that's what I'll be showing over the next months and whatever it is, we'll be following it, and we'll follow the incremental rise and then a geometrical expansion in size and in height and everything. That's what you expect in what I call the coda phase of the Dow. Nothing is going to happen unless we make an all-time high, and it has to be in December or January in the Dow. If we don't, then this wave 4 in Elliott and Chapman wave, we've already had that peak G to the top side. That consolidation will continue with a rotation going into January, maybe even early February. So this is a very important period to say, where should we become a little more careful? Where should we start adding? What areas? Are we looking at the commodities because the dollar's putting down? I'm going to talk about that. Well, are commodities suddenly becoming the thing? We spoke about that last night. Hey, fascinating period, always fascinating in the market. I think that's why those of us, the hosts that you have on Tiger Financial News Network, we have all our lives just about been totally involved in markets and thinking about them in a technical way and why things move and what makes them move. We'll be back right into the socio-economic stuff over the coming weeks. But right now I want to go to the stock market. Let's just do this. I wanted to show you something very interesting. Gold, it's okay. Nothing here at minus 370, but something has happened that says there is a chance. There is just a chance, let me move this 120-minute chart here because it's a little deceptive, that a pretty decent bounce can unfold in the commodities. Now, I don't know yet if I'm going to include crude oil because there are other factors involved in crude oil. And talking about that Jeddah Tower, I would not be surprised if it's coinciding with oil way down in the low teens or even lower. That's just the way markets work. It's the way nature seems to work. As you're patting yourself on the back, you get hit by the swings, whatever the expression I have. Okay, so here we are. Look at USO. Trying desperately, but there is something else going on in the oil. This is the United States Oil Fund. Whereas if you're looking at copper, at least it's flattening out. It's not a great chart by any means. The technicals are rallying, the price is just stuck. I don't like to see that. But when you're looking at an area of something like silver in relation, keep an eye on this chart, this one on the left. First of all, look at the right, that's an F. I'm going to call it an F/. I'm calling it an F for now. And this one is recycled. This is the monthly, and this is actually a new leg D to the downside. Keep an eye there. And as we go to the break, I'll look at this chart here. And you'll see there's a little bit of difference between gold and silver, but not much. We'll talk about that when we get back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of the banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Quick question about the E-minis. I posted my chart just now, what I call the naked chart. But here I've got the one with the Chapman Wave support and resistance line numbers on them. And you can see this cluster 2044 down to 2042, the cluster of red numbers, and that's saying the bigger the cluster, the stronger the support. And there was just one resistance at 220.55.95, and it just went right through it. But it does have the character so far of a single leg A up. So we're going to be watching this real closely. And 20.55.95 is a support. 20.55 is really the support that has to hold. And if it takes out the high that was made at 2062.50, that's going to start a new leg B at this point. It's so far, it looks like it might turn out to be the single leg A up. Now, let's go back to our story. Oh, wait, and then I had a couple of emails. One was from Alan. He says, wow, rally. And then he says, tell me you're not, what did he say? I thought it was kind of cute. Tell me you're not short. Please, tell me you're covered and you're long. No, I did not cover. In fact, we still got shorts, and the shorts are not moving at all. And so I'm satisfied with that. But at the same time, I did say to subscribers, that was number 2 on the list of 16 in my Traders Corner. It was a choice between 3 times long the Dow or 3 times short, and I actually put them in, both of them. And I said, it favors the upside after a dip. But I was all ready to do the trade, to put it on. And then I said, you know what? The whippiness is just so, there's just so, the trading range, let me just show you the chart that we discussed. I discussed this morning with my I showed my subscribers, I also discussed last night. We're in this trading range, and this trading range says that 200-period exponential moving average is starting to be tested more and more, but it has been a springboard up until now. And that 9-period moving average, that maroon line that you can just see, let me see how I'm looking at the chart. Yep, you can see it. That maroon line right there has been the resistance, and bam, it went right to the resistance and it pulled back. So the choppiness, we just, a trading range can last, a rectangle trading range can last a lot longer than your patience. And we've been in this since we broke out on the, what day was that big candle right there? That big candle of the 22nd of October, where we opened at 17,180, and we went straight up to 17,505. That candle there, since we broke out, we've been in a trading range. It feels really wide, but it's just the tiniest little trading range when you're looking from the 15,942 low to the 17,977. This is just not even the top 1/3 of the trade. Yeah, it's in the 1/3. So, yeah, it's to be expected. All right. So that was that question. So the answer is no. But that doesn't mean to say that I'm not prepared to. I'm prepared to cover if I see that things are not working out. I just think we're in the trading range, and the stocks that we've identified as being weak, there shouldn't be any change in any 1 day or 2 day pop up. That's the way I'm looking at it. Okay, the next question I had was, so there's a question here. I don't know if you remember, George had called in from New York, and he looked at VSI. And he just wants to know about it, but he can't actually call in today. He's out, but he just send me an email and he'll listen later on. VSI is acting very well. And you had identified this as probably a turnaround situation. Vitamin Shop trading at 33.31, up 51 cents. And that was like just over a week ago, and it was down, if I recall correctly, it was in the 30 to 31 area. And I'd said, start a position, nibble on it, get a feel for it. If you're really looking at it as a long term and you've done your homework and you'd considered that, in a sense, it was the intrinsic value is really what he likes to do work on, and his intrinsic value had it quite a bit higher. So the question is, what about now? I would recommend that you actually add right now another small position. It's at 33.31. This is only for this is for George with a question, because he has a particular framework, he has a particular scenario in mind, and he's prepared to have wiggling up and down, because his longer term outlook has it that at some point the numbers that he has calculated will be seen in the stock. And he does this, he calls into the show many times over the years, and really accurate. Most of these longer term projections eventually work out, and I'm looking at this and I'm saying, yes, I think that this is one that you could add to. It's still early in the monthly, very early in the monthly chart, a little better in the weekly chart because it's had 3 weeks now of nice green candles. We've got 1 day to go. I think that green candles still remain in place. So I do think, yes, you can now add to it. The full position, not yet. Needs a little more work. You do your homework, so let the stock do its homework as well. So treat it as something that's an ongoing process, which is kind of what you do. So that's that. A couple of things I wanted to talk about here. I wanted to just show you the EUR USD as we go to a break. Nice move up, but it's pulled back today. We'll talk about the Euro US dollar when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, I'm going to do the euro, but let me just finish showing you something in the dollar because there's a direct relationship. This is a nice inside candle right here. Not great, but it's after yesterday's smash to the downside. This is a 50% retracement. It's good. But within this context, you can see that it's now the dollar's making lower lows and lower highs. It never did that. It didn't even know it. In fact, it hadn't even read the book about lower lows and lower highs because all it kept doing was making since the middle of October, higher highs and higher lows. So this becomes a change of scenario, change of trend. Short term, I'm looking at this as the tide has changed. The medium term, the intermediate term, I should say, still says that a very important level to watch will be around about 96. I'd like to get this exact. I'm approximating it now. I don't want to take time to actually measure it, but I'm suggesting that right there. Yeah, 96.50 to 96 is going to be really important support in the weekly chart. Why? Because if it starts to take that out, then this down channel, which was resistance and then has become support, says that 96. It depends when it is. I'm talking about next week. 96.60 to 96.50 is that dashed line support. If it takes that out, there's a chance you can get a full arch formation that takes you at some point in January down to the low of this candle, the Roman candle, the green Roman candle. It takes you down to the 93 area, but 92.62 would be the downside target. That would take time, and that would help the commodities, but especially gold, to at least have the chance to move higher, to have a bounce for the first time in a long time. So that's the way I'm looking at it. Now we can go to the euro, because the euro shows something very interesting. It shows in the weekly chart and in the monthly chart that the left side low of 1.04617, I can't stand these numbers. Why did they do that? Anyway, 1.05201, 1.04617. So that 4617 area never got taken out on this pullback. We went to 5387. So if we're looking at the weekly chart shows right here that you've got the pattern that I call the lowercase h. There's also an inverted falling axe formation. This would have been on the upside. We talk about that cone, descending cone, expanding cone. You break the upside, you can go towards the top. In this case, you broke the downside of this wedge formation. And instead of breaking and taking out the lows, so far, great candle last week and a very good candle considering the bearishness out there. This is a pretty good candle so far with a day to go in the euro dollar currency pair. It's trading at 1.09410, down 0.008. And this is saying that the stochastic is trying to turn. It hasn't got to 20% yet. It's trying its best. And the MACD hasn't crossed positive, but the histogram is narrowing, and that's good. So there's a lot of work to be done. But what I wanted to show is that there is a mirror image correlation, and that correlation suggesting with the stochastic at 80.76% that there's actually a buy signal to a buy mode. Now, it's really unfortunate I couldn't call that A and I have to call that A, because that would be B, and say, hey, now we're a little further along. The MACD is expanding, stochastic is good. Could you put an up arrow? It's a little premature. I really want to wait until tomorrow. I want to base it on more on the weekly chart, but I'm going to put a plus sign here. And I can't remember if this is, let me just do this real quickly. Trough B, trough C, trough D, and it looks like a recycle. Let's call that, just for argument's sake, E. And then there's a pop to the up E right there. Pop to the upside, goes to an A minus because it fails. And now we've got a brand new what? A, B, C, D, and you've got yourself an E. So that suggests altogether that if tomorrow you could have a little bit higher close, not intraday, just it has to close. At this point, it's at 9797. I'd like to see it right there at 9. Oh, no, sorry. Right now it's at 9458. I'd like to see it tomorrow somewhere in the 1.09826-ish area, somewhere in the middle of the body of this candle. And they'll say to me, hey, you know what? MACD is still going to be very strong. If that happens, even stronger, I think that there's a buy signal that could very well tomorrow become a buy mode in the euro-dollar currency pair, because it's eliminated so far the single leg A phenomenon, and that's important. Let me talk about that. The 10-minute, I'm sure, E-minis making that leg A single leg up phenomenon. There it is. Single leg A up. We had that yesterday. Gosh, this looked so big yesterday. Now it looks so tiny. Look at that move, that single leg A to the upside. Why is it a single leg A? Because you started in your buy mode right there. Let me draw a horizontal line. You'll see what I'm talking about, because we like to be educational here, not just ambling away. That low was taken out. Oh, it was even taken out there, so that's not even a D. So this is ABC, and then an A minus, and it goes to a lower low, and then another A minus. So these are all aberrational aspects, but that single leg A, we're going to watch it closely, because if there is at any point in the next, by the end of the show, by midday, if there is a close below 2053, then I would say that we've probably seen the high of the day, and you're just going to mess around in a trading range. So this is very important, because if there's another move and it goes above this candle that we just made of 205675, it says, hey, now you can draw the cup formation. So the other things, I would use some of the technicals that I like to use if I was right at this particular point. Right now, a lot of this you could have done just based on the chart formation. At this particular point, to see whether or not you got the opportunity to go higher, I'd have to look at, is there a 10-minute chart in the room? 15 seconds? No, 15 seconds is not good. All right, I can't find it right now. I'll try to find it. Let me just do this. Quick run through here. Is that the one? Yeah, okay, so there it is. Here's your 10-minute chart. Stochastic's starting to improve. The MACD is trying to turn around. The histogram's improving, but you haven't got the price move. This price has to go right now at, we're looking at the euro. There we go. Now we're looking at the right thing. This price has to, the MACD is coming down, but it's still positive. The stochastic's gone way into the 66 area, below 80%, not so good. So the technicals are suggesting right now that this is just a burst of energy and that we've got to really watch this closely, because if there is a pullback and 2052.50 would be the 200-period exponential moving average, a close below that says single leg A up failure. Now we can just meander around. So now we've got to look at a couple of things. And I'm going to be talking about this tonight because, you know, it's really part of my vernacular. It's part of what I like to talk about. I'll be talking about the quartet. In this case, it's Dolly, Vixie, Bondy, and Goldie. Huh? That's the volatility index, the dollar index, the bonds, and the gold index or gold. And that's really going to be very important right now, because there is a chance that we've got an inflection point that's kicking in right now. And that would include seeing some kind of a change in even natural gas. People are talking about, I think I'm going to exclude the gas, natural gas and the oil in this particular, for this moment. They will come along later, but I think it has to be done based on the gold contract and the dollar. So when I'm putting these things together, those four, the quartet, is going to be absolutely important. Can I make an acronym from that? So what have we got here? We've got D. We've got, no, I think I tried and it didn't work. So DG, DGV. Oh, you have a V. What can you do? DGV and B. So VGB. I'll work something out. We'll make it rhyme. We'll do something. Oh, they all got I's at the end. DGVB. Oh, very good. We'll find something. But in the meantime, that's the quartet that's really important at this stage. And one of the reasons why, to answer L, I didn't want to go long very many things other than a different sector altogether, is that this is becoming an extremely selective period. And the choppiness, it's like a little ping pong ball. I mentioned it this morning to subscribers. It's like the Olympic table tennis right now. We're just ping-ponging really quickly. You know how the speed that they get that ball to go. You can barely see it. Well, that's what we're seeing now. Intraday, we've got these kinds of moves. When you get to this, you remember, I always think of a dog getting wet in the water, and then it comes out and it stands with the forelegs just stuck into the ground like in concrete, and it shakes and shakes and shakes and shakes, and then everybody gets wet, and then the dog just kind of walks off as if nothing happened. And that's the shaking that we're looking at right now. How is this going to resolve itself? Is it going to be that there's enough strength because the market suddenly feels comfortable, done, one and done. They've done this quarter point, and now we can move on by the second, maybe the first week of January, the last week of December. All of a sudden, you get this breakout, which takes the market, and this would be also very interesting chart formations. You get the technicals not really confirming, but you get a sudden spiral to the upside. You get into the 18,030 area, then all of a sudden you say, hey, we're only now 300 points away, from making that all-time high. You see, this is going to be really interesting, because all you have to do is to start to break down and go under 17,200. So instead of the 300, instead of the 800 points to the upside, instead you come down just 300, just 200 points. You break 17,210. No, it's more than that. It'll be 360, almost 400 points. Come down the 400 points, and then all of a sudden you've got that arch formation which says a deliberate down move has begun. A deliberate meaning time and price. Meantime, you're just stuck in this range. This is like every once in a while I'll call the session dartfish. I don't even know if there is such a thing as a dartfish, but it's like a fish that quickly moves one way because it sees something, and then it stops there, and then everybody thinks, oh, it's moving that way, and then it just stops there. and then it reverses, and it quickly moves back again, but it only moves like 1 inch or 2 inches, and then it stops dead. Dartfish day. And that's kind of what we're seeing. So when that happens, the best is to identify the particular sectors or stocks that you feel really comfortable with. Like at this point, I do feel very comfortable with our shorts. It's hard to say. You can never really. I mean, you get these takeovers or mergers. Anything can happen. But we've got that situation, and I'm prepared to sit with that. And I'm prepared to say selectively long, and more and more shorts are starting to show up. That's a very interesting period. Okay, now let's get back to the story that we were looking at a moment ago. So I said the euro, EUR-USD. And I discussed the euro in terms of this wave count. I also drew in, during the break, I drew in left side, right side price time match. It turns out it's not the fulcrum, it's not the plumb line from the low that was made on the 3rd of December. I like to start off a little cautiously. I identify a particular candle. I have a rule of thumb that we use, and I identify a particular candle or a particular trough or peak, and that becomes the guideline for the upside move. And in this particular case, I feel very comfortable saying that this green Chapman wave inside wedge target line, which identifies the 23rd, that's a long time, 23rd of December, as a period to be testing two things. One is the high of the 23rd of October at 1.11391 to the 1.12 area of the 200 period exponential moving average. That's what I'm identifying. But as a practical source, I'm not trading. I don't trade the currencies. But if I was trading the currency, I would also immediately, and this is, you know that I do that, my subscribers know I always do that, I draw in an arch formation, because that's that failure formation that we've got to be prepared for. And that says you've got two competing technical tools. One is the cup formation, really starts right there, that little candle, and it's going around. So all of this is outside the box, but it doesn't matter because you're identifying the upside projection. And the other is more traditional. And I would then say I have to take that low, the plumb line of the 3rd, but that takes me way out there. And then if I do that, I can do it. I would do it later on. And then I would do this. I'd say, and to me, these are just projections that I like to have on paper, but until you go through the one level, until you go through your first level of the resistance, how can I even talk about something so far up as a candle from the 15th of October? But that's the way I like to do these things. So let me just draw this in. Yeah, we'll have it then. We'll look at it in a couple of weeks, and we'll say, hey, how's that working out for you now that the euro dollar is down at 90.90? No, I'm just joking. We'll see what happens. All right, I don't want to add to the right, but it goes all the way into January somewhere, right? And that says that you would use this candle and project it out. In fact, we'll do this just for fun. I'll extend to the right. I have no idea where it's gone, but that's what we're looking at. All right, so that's what we're looking at in terms of projections for the euro. Meantime, a close below the 9-period exponential moving average, somewhere in the 1.82 area, said, uh-oh, just another failure pattern. And that would say that the dollar is probably rallied all the way above the 9-period moving average into the 98.80 to the 99.20 area. I think it's going to have a tough time. I think the dollar deserves a break, and it's getting there. Hey, I'll be back. Basil Chapman, Target Conditions Hour, and the Dow is up 91, S&P's up there.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hey, June, you've got some great shows coming up today. So let me just answer this quick email. It says, Basil, what is the trend telling you today? Oh, wait. Okay, oh, there it is. What is the trend telling you today? Thanks. Have a great Hanukkah, Gringo. Okay, well, this is what we're looking at here, and back at you. And I don't actually do any celebrating of that because you got to have my grandkids around. They're not around here right now, so otherwise there'd be a fuss made. Anyway, the VIX index is at 19.36. We spoke about this last night. In fact, we had quite a long discussion about it. There were people that actually trade the VIX all the time. It's one person said that's the main thing that they trade. So we discussed, and what my contention was two things. For the first time in a while, you've got the volatility index holding up in the 19s area. Well, I've always said that in the 19s, you've got a weak market, and we've seen the market has been weak, but you've got these spikes. So there's a dichotomy. There's a split personality between the markets at this time. There are people that are buying protection. There's no question about it, because they don't know what's going to happen next week with the Fed. They don't know. They do know what's going to happen. They don't know what the market response is going to be, and that's really important. And that's number one. Number two is, in the VIX itself, all I can say is that the VIX at 19.37 is putting a limit on the upside. But at the moment there's a relief on an economic basis, or something said that allows the market to have some kind of relief about the downside, you'll see this VIX just plummet. So tomorrow, Friday, being the weekend before the week of the statement, I wouldn't be surprised if the VIX actually holds up here. And just for the moment, for one of the few times I'm saying the VIX now is just insurance. The fact that it's at 19.38 says that the Dow should be at 17,200 or so. This is just my thinking. It should be at least 300-400 points lower, but because it's held up so well in the 18-19 area. But it isn't. So I'm looking at this as more insurance, a little divorced from the market as it is right now. Okay, that's number one. Number two is, I'm going to talk about the VIX tonight. I'm going to talk about it in relation to the other things in my webinar. So please come to the webinar if you're interested in my newsletter, if you're interested in my techniques and you want to just follow through a little bit more. 30 days free is a nice way to do it. And not only that, you might get some really good trades. You never know. Some of them have worked out very well. Now, I got a couple of questions in the chat. Just for the moment, I'm going to have to leave that. I'm sorry. I'll get to that tomorrow. What I do want to do, because it's part of what I'll be discussing, is I'm going to be talking about the relationship. For those of you who know about Elliott wave, 5 is the most powerful one. That's the leg that it could be a number of legs, but it's the move on the upside that's equivalent to me to a breakout in the monthly chart that says you're going to a DE, and it's a major move to the upside. If that's the case, it just cannot occur until the Dow makes a new all-time high, and I'd like the S&P to do the same thing. So those are the criteria. This is in preparation for that whole thing that I'm going to talk about, the socioeconomic, all these things coming together. Have we already made some kind of a top of major importance? I don't think so. I just don't think so. And I believe that there will be another big move to come. Do we go down first to continue what's really in this particular moment 4 in Elliott wave to the downside, even though we've had a spectacular move? And in the Chapman wave, look, here's your peak that went to peak G in the Dow. Unusual peak G, but it's a peak G, INDU. There it is. And we've had a spectacular rally, but it's starting to stall. These rallies that make a V-shaped formation can also make a right shoulder formation, which says it could pull back. And if the Dow at any point breaks 17,000, this is what I'll discuss. And the upside, if it goes to 18,352, it's just another ball game that we're looking at. And it's actually, for me, a breakout into a very strong 2016, even if in the first part of 2016 there's a pretty sharp decline. So how do you put this whole thing together? What are you looking at? What's going to be impacted by a slightly higher rate? Is it one and done? A whole bunch of things we'll talk about. Looking forward to seeing many of you tonight, I hope. And thanks for being here. Stay tuned. You've got Daryl coming up with great shows. And I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.